I think it'll have an impact. I think it doesn't change, interest rates are still one thing. So I think those have to change the economy has to kind of level out and come to terms with like what the cost of debt right now. But the bonus depreciation, what you're referring to, like the Tax Cuts and Jobs Act that was implemented in 2017. And
you're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. Hey, we're in the beginning of September. Never too late to start reevaluating your investment prospects. Best place to be now, market highly volatile. Do you go to real estate? Well, Sean Graham is with us now, Maven Equities, and it's also a CPA, but we won't hold that against him. And hey, Sean, you built up quite a real estate empire there. Is now a good time to get into real estate with all the volatility and the uncertainty, recession, and all of that good stuff? What are your thoughts?
Wow, that is a good question. I think as Robert Kiyosaki might say, it's always a good time. It's more just what you are getting into and, getting into the right deal at the right numbers. So I'm in self-storage. I invest in self-storage. I don't like to force anything, so I haven't. Last deal we closed on was end of 2022, Q4 of 2022. And that's just because sellers seem to still want the same numbers that they did in the middle of COVID in 2021, 2020. But cap rates, they want the same cap rates, but interest rates have increased dramatically. So the cost of the same acquisition is much higher from a cash flow standpoint. So I think, there's definitely opportunity. There's people that are doing deals. They're doing self-storage deals. They're doing, residential deals. I think it's always a good time. I also think that there's going to be a lot of people where their debt is no longer fixed. The interest rate's no longer fixed, and that's being reset here in coming years. So there will be some opportunity. I think there will be some blood in the water where people need to get out and they need to sell. So I think the people who are continuing to underwrite and continuing to network and talk to respective sellers, those are the ones who are going to win. So I don't believe in forcing anything just to do a deal, but I think it's a good time to keep connecting, and you're going to be ahead of the pack once interest rates drop a point or anything like that.
Yeah. So before we get into the interest rate forecast for the future, how'd you wind up getting into self-storage? I mean, there's so many different sub-markets in real estate, residential, single family, right, all these things. What led you to self-storage?
Honestly, it's simple. It's a very simple business. It's simple, it's straightforward. I like to say we're renting sheds. People aren't living there. You're not dealing with plumbing. You don't have to deal with evictions. There's lien laws, which are different, right? If people don't pay for their storage space, but it's a simple business. It's not overly complex. And so when I was looking to make the jump from residential into commercial, it's just a matter of, okay, which asset class do you want to jump into? And I think you can be successful no matter what asset class you focus on, whether it's apartment buildings or mobile home parks or self-storage or retail space. It doesn't really matter. I chose self-storage because of the simplicity and because of the availability for debt or capital. So the government looks at self-storage as a business. They don't look at it as a real estate investment per se. And really it's both, right? Like you're investing in real estate, but it is a business. And so when I started, I used SBA loans. And SBA loans are pretty high leverage. You can get in for, little money down, 10, 15% down. And you have the SBA guarantee. So banks are more willing to do that. You can't do that with apartment buildings or mobile home parks. So it's a little bit different. And that's really why I decided to go with self-storage.
So what kind of cap rates are we looking at in self-storage?
That's a great question. I think you have different classes of self-storage. You have Class A facilities that are multi-story, they're climate controlled, they're indoor, they're top of the line, right? That's like when you drive by, you see a public storage or an extra space storage. And then you have small facilities that maybe aren't even fenced in, and they are, they may have a gate, they may not have a gate. They're just outdoor roll-up doors. They're gravel. Those things are different. So cap rates on Class A facilities could be, let's just say 6%, maybe sometimes it's 5%, 6%. I don't really see it going above that much. Class C, Class D facilities, you're looking at like 8%, so 7, 8, percent, something like that. So then you have everything in between. So I think the value of self-storage is really the size of it and the type of tenant that it attracts, the type of customer it attracts, because all that, goes into economies of scale and to how you can run it if you have a portfolio, and
right,
as well as just rental rates.
Do you manage your own facilities, or you rent them out to an operator?
We do both. So we do not rent them out to the operator. So we don't use a publicly traded name or anything like that. We don't use a REIT to manage our facilities. So we manage them in-house. Some of them are just solely in-house. Some of them, we have a third-party manager that just focuses on self-storage to help us. And some of them, it's like, okay, we just outsource the call center, but then the actual management, dealing with the tenants, the turnover, the auctions, all of that, we keep in-house. So a lot of my team is overseas. We use a lot of people overseas to run the facilities and to manage them and manage the call center. They're not overly complex, but it really just depends on the size of the facility.
So I bet you have some crazy stories there, especially with the auctions and what people wind up storing in your storage facility.
Man, I don't have any crazy crime stories or anything like that.
Dead bodies?
No dead bodies, well, nothing that's gonna, make a TV show or anything like that. I think
disappointing.
Yeah, you just try to avoid. There's always, I think, like every area of the country, you have a certain amount of the population has issues with drugs, and so that can sometimes get involved. But nothing too exciting.
I heard of people actually living in hemp.
They do. They try. Sometimes they try living them. I haven't, luckily, knock on wood here. That hasn't happened to me so far. But yeah, people will try to live in them for sure.
Wild. Hey, so we're looking at, an interesting section, submarket of real estate. So tell us about cost segregation studies, and how that's beneficial in self-storage.
For sure. So I'm a CPA. That's my background. And so I have a cost segregation firm, and we just focus on helping investors and real estate owners and operators break down the depreciation benefits of their investment property. So, we do everything from large commercial, like self-storage. We do detailed studies on these, down to more streamlined versions, what we call modeling studies for residential investors. So I think there's a gap in the market where a lot of people, they have a rental property. They just have a couple rental properties, single family homes, or maybe a small multifamily, but they don't want to pay thousands of dollars for a cost segregation study. So that's where we come in, and we have what we call a modeling study, which is more streamlined. It's focused on like the big ticket items. It's not going to get every single detail out of the property, but it's kind of getting 80% of the benefit for 20% of the cost. And that's what we're looking to do. So I think when you look at cost segregation, the IRS, right, actually taking a step back, the IRS says, well, you bought a building, or you bought this investment property, you can depreciate it over time. you can write it off, right? If it's commercial, 39 years. If it's a residential type of property, 27 and a half years. And so little by little over 30 or 40 years, you're expensing out the cost of the property, less the land value, but just the cost of the actual building, and taking those deductions on your tax return, right? And that's why you see a lot of real estate investors, they don't pay any taxes. And most of it is because of depreciation. They have a lot of depreciation write-off, and they can offset most of their income. What we do is we come in, we say, hey, well, not everything is going to be depreciated over 27 and a half years or over 39 years. We can actually accelerate a lot of it, expense a lot out in year one, push a lot of it towards the first 5 years or the first 15 years, and we lower the lifespans of the different components of it. And our job is to get the investor, the owner, as much of a depreciation expense upfront as possible. So this helps them offset their income. So the IRS kind of looks at income in two buckets. And there's a lot, obviously I'm speaking from a high level, there's a lot more detail than this, but they say, okay, you have passive income from investing in real estate. And you have depreciation, which is part of real estate. It's a passive loss, right? And so it allows you to offset your passive income from real estate, or it could be from other things like capital gains from selling a long-term buy and hold, or it could be investing in the stock market, whatever it is, it helps you offset those passive gains. On the other side, you have active income, or what I call active income. They call it ordinary income, right? And that's your W-2 income. That's your business income. And that's taxed at ordinary tax rates. Depreciation, which is a passive loss, typically cannot offset that active income. What we're able to do is like talk to a lot of people and see if there are opportunities, because there are some things where you can get into certain things that you can do to use depreciation to offset your ordinary income. So we help people with those. Couple of those, I don't know, you might have heard, but like short-term rentals, right? Those are considered ordinary income, ordinary businesses if you meet the qualifications. There's also the real estate professional status. Like if you're in real estate full-time, all those things can help you use your passive depreciation losses to offset your ordinary income.
Mm-hmm. So, okay. And so originally you could like write off all the, other than the structure, you could write that off like instantly under Section 179 the day you bought it. But now that's like phasing out. So obviously this election for real estate investors is going to have a big impact, because if the Trump tax cut gets reinstated, we're going to see a boom in real estate, aren't we?
I think so. Yes, I think it'll have it'll have an impact. I think it doesn't change. Interest rates are still one thing. So I think those have to change. In the economy has to kind of level out and come to terms with like what the cost of debt right now. But the bonus depreciation, what you're referring to, and like the Tax Cuts and Jobs Act that was implemented in 2017, and really said from full year 2018 through end of 2022, a lot of the life, anything that was like less than 20-year life, so 5-year life class or 15-year life class, those items could be expensed out in year one, 100% their bonus depreciation. So we still have that. Like in 2024, it's actually 60% of it, and that's slowly being phased out. Right, it's going down 20% every single year. But even besides that, like you are able to push a lot of it towards the 5-year life and towards the 15-year life or 7-year life class. And those things allow you to expense it out quicker. So it's not as beneficial as if the bonus depreciation was implemented right away. But you're still getting a lot of benefit there as opposed to waiting, close to 30 or 40 years. So it'll be interesting to see what happens, see what passes. I know they were looking at extending the bonus depreciation earlier this year. It didn't pass, and pretty much was one of those things where it's like, hey, let's just wait till after the election. So we'll see. I try not to get tied down into it too much. It's I think bonus depreciation, it comes and goes at different times, and so it's been around for decades. And there's plenty of times they've incentivized people to buy real estate now and incentivize the bonus depreciation. So we'll see what happens here.
All right. Going to be interesting. Well, hey, we appreciate you coming on. And I guess it always is a good time and a bad time to buy real estate. And sometimes it all depends on those imponderable intangibles about what's going to happen in the future that none of us know. Hey, if we want to find out more about you, connect with you on the web, how do you do that?
Yeah, so I had my team make a link just for your listeners. So if they go to mavencostseg.com/Kerry, I'll give them a discount there. Is it on any cost seg studies? We do any estimates. So either go to mavencostseg.com/Kerry or just email me, Sean@mavencostseg.com. And that's the best way to get a hold of me.
Great. And that link is in the show notes to this interview on financialsurvivalnetwork.com. Just go there, click it. When you're there, please sign up for a free newsletter. Got a lot of interesting tips to make you money, like what Sean's doing, and to save you money. And just sign up. And if you got a question for Sean, myself, as always, send me an email to kl@kerrylutz.com. Sean, thanks for stopping by.
All right. Thanks, Kerry. Appreciate you having me.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.